what's in store for the tech industry as this quarter's earnings season winds down. Joining us now, Mark Mahaney, lead internet analyst with RBC Capital Markets. Great to have you back here on the show, Mark. So you don't cover Apple, but you cover all the rest. What's your take? What do you think the big highlights from earnings seasons are? Obviously, we saw a strong quarter from basically all of these companies.
I think two takeaways. One, the demand trends remain extremely consistent. So I think this was our 30th quarter in a row of 20% year-over-year revenue growth for Google, our 17th quarter in a row of about 50% year-over-year ad revenue for Facebook, and then about 20% year-over-year growth for almost 10 years now for Amazon. So we've seen very consistent demand trends. That's point one. Point two is the investments are heavy, and they were heavy last year and the year before that. And they're probably going to be heavy the next year too. These companies clearly want to maintain these growth rates, and they think they've got a lot of new opportunities to go after, whether it's Amazon now talking about advertising revenue, or Netflix spending a lot more money to build out its international content library. These companies all remain in growth and investment mode. There's no scenario under which margins are going to materially expand here.
Let's talk about advertising revenue. Facebook and Google still dominate the pie. I mean, is there any room for other players at this point?
Like a Snap or a Twitter?
Yeah. Big sigh.
Yeah, it's a big sigh. It's unknown. Now, whether they can get to a couple of billion in revenue, 2 billion, 3 billion, yeah, probably. And we call that the experimental budget zone. You know, like you can get a couple of $1 billion from advertisers because they all want a little bit of diversification from Google and from Facebook. But in order to get much more than that, call it 5 billion. There's nobody out there really getting 5 billion of ad revenue. You've got to really prove your ROI. You've got to come up with innovative ad formats. We think of the two, Snap has the better chance of getting there, but it's also starting from a smaller base. But we think that's the better chance of getting there.
Snap's been struggling. Facebook's been taking on some of Snap's most popular ideas. Are you worried about Snap?
Yeah, absolutely. Snap, we have a buy call on Snap, and we initiated at $24 about 2 months ago or 3 months ago. So we clearly don't know the stock yet. We'll see what happens.
And you're holding that.
Yep, sticking with it. There's two things that this company needs to do. First is they need to re-accelerate the DAU growth, daily average user growth. It's the same thing with Twitter. If the users decline, the stock will decline. Now, Snap needs to get that growth rate re-accelerating, and then they've rolled out a self-service advertising solution, so they need to do that to get more advertisers on the network and cause their ad revenue growth to stabilize. Look, it's still growing triple digits. There's no triple-digit ad revenue grower out there. It's Snap, and we think the valuation doesn't reflect that.
But do you think they can do that when it comes to user growth, especially given the complete lack thereof of international user growth? I
think so, for two reasons. One is that they are fixing their Android problem. They were blindsided, like Facebook was like 4 or 5 years ago with this mobile thing. Back then, that was new.
The mobile thing.
Yeah, the mobile thing. The Android thing is what blindsided Snap this time, and Snap needs to make sure that its app is fully integrated well on all Android devices. That's a couple of quarters fix. The second thing they need to do to get those DAUs growing again, or continue to grow and maybe at a faster level, is just to keep rolling out better and better features. I think Snap Maps falls into that. I thought that was kind of a pretty cool feature that they've got. They got to do more of that, and if they do, I think DAUs grow. If they don't innovate, the DAUs will flatline, the stock will flatline at best.
Amazon forecasting a potential quarterly loss for the first time in a while, obviously being very aggressive about moving into new markets like groceries. Are you concerned?
No, not really. Look, come on, 20 years of growth, investments, losses, gains. I think they've kind of proven
big bets.
Yes, and successful big bets. The biggest single trend probably across technology right now is cloud computing, and that was Amazon's big bet. They've had a series of other good bets, like the third-party marketplace. I think the Kindle family of devices has been pretty good. I think these Echo devices, I think they've got a home run on their hands there. So, yeah, I'm willing to allow them to invest. And by the way, groceries is a very large TAM. It's a logistics business. Amazon is logistics. So, yeah, I mean, a little bit of concern. But, you know, over time, they've built up trust, at least from me.
Amazon seeing more success with its own original content. Netflix, of course, spending billions of dollars on original content. Now you have competitors like Hulu with a hit now, The Handmaid's Tale. Do you think Netflix's burn is sustainable? Is this paying off?
I'm not going to sigh so much on Netflix, and the reason is we've run surveys now 2 years in a row, and we find that amongst Amazon customers, regular Amazon customers, non-Prime, 50% of them are Netflix subs. Amongst Prime Amazon customers, those who get the free, quote-unquote, free video, 70% of them, and a growing percentage are Netflix subs. I think what's really happening here is the death of the big bundle, and people, consumers, especially the most, quote-unquote, more advanced internet users, are going to Prime, and they're going to Netflix. Netflix. And I think you've got this huge secular tailwind, the shift over to streaming, and I think Netflix is the biggest beneficiary of that. And you know why? Or they've got great content, that's one. But the data, the proof of that point is the fact they're going to add more subs this year than they did last year. In the U.S., their most mature market, they're adding more subs this year than last year. We're not at the end of the S-curve for Netflix.